Welcome back. The Consumer Price Index we were reading today rose more than forecast in May. Let's bring in Dean Maki. He's the chief U.S. economist at Barclays. Bloomberg ranks him among the most accurate forecasters on consumer prices, making him a Bloomberg best, and he joins us now from his office here in New York. Dean, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you, Mark.
Dean, talk to me about how much the cost of raw materials are now making their way into the overall economy. This has to be having an effect.
We are seeing not only food and energy prices rise, which has been the case for some time. This morning we saw the fastest rise in core inflation that we've seen in 5 years in the U.S. And it is a pretty broad-based rise in the core. Things like vehicle prices, apparel prices, all posted strong increases. So we are seeing those prices pass through now to the consumer.
Dean, you mentioned the apparel prices and also the auto prices. New car prices up just over 1% last month, and clothing rising 1.2%. Is that trend going to continue through the end of the year?
We do think that the strength in vehicle prices will continue to be there. Now, we are getting a temporary boost right now from some of the supply chain disruptions in Japan. So I wouldn't expect the magnitude of these increases to continue, but we do expect that vehicle prices will continue to trend higher. We have seen the car makers be much more disciplined in how much supply they put out there, and that's giving them a lot more pricing power.
And we'll talk about Japan in just a moment, but those higher apparel costs, that pegged undoubtedly to the higher price of cotton there and increased labor cost overseas, we should mention. How is this going to affect consumers towards the end of the summer, particularly during that back-to-school shopping season?
Well, consumers are going to have to get used to somewhat higher prices. And in addition to the factors you mentioned, imported apparel prices are rising at a significant pace right now. So we don't see this as a temporary bout of core inflation increase. We think core is going to continue to rise, and consumers will be seeing more price increases than they have been in recent years.
Dean, when are we going to see economic growth start to accelerate?
We think that in the third quarter, you will see a pickup in growth. We're looking for 3% growth, up from 2% in the second quarter. While core inflation is rising, headline inflation is taking a bit of a breather here. We only saw a 0.2% increase in May. We think we may actually see a decline in headline inflation in June. And this is because gasoline prices are falling. That's going to give consumers more purchasing power and allow them to spend more.
Dean, the core CPI, as you mentioned, climbing 1.5% from May of 2010. That's the most since January of 2010. In a speech last week in Atlanta, Fed Chairman Ben Bernanke said, quote, "There isn't much evidence that inflation is becoming broad-based or ingrained." Given today's numbers, is it time for the Fed to start worrying about inflation, and will the Fed adopt an explicit target for inflation?
Well, I think these numbers have to generate a bit of concern at the Fed. Now, the Fed pays more attention to core inflation than headline. And from their perspective, core is still somewhat too low. But it is rising pretty quickly. So I think that any fears of disinflation have really dissipated. And if these numbers continue to increase at the pace they have been, the Fed will be more concerned. The Fed certainly will be talking about an explicit inflation target. I would be expecting that over time they move in that direction. I'm not sure it's going to happen extremely soon, though.
Dean, in our last 30 seconds, you mentioned Japan. When it recovers from this year's deadly earthquake and tsunami, will we see a substantial and sustained pickup in manufacturing?
We are looking for Japanese GDP growth to turn significantly positive in the third quarter. And industrial production is going to turn quite sharply. So we do think that there will be significant gains in production. We'll see some of that in greater supply of U.S. autos, or autos in the U.S. In the second half.
Dean Maki, he's the chief U.S. economist at Barclays, joining us from his office here in New York. Dean, it's always a pleasure. Thanks so much.
Thank you.